What's up, guys? It's Tarikcesarr. Today we are going to discuss about this setup on USDCHF that we took last week, and we're going to make a breakdown. I will be explaining why I took this trade, why I put the sell there, and etc. Let's go to the video. So first things first, when I came into the chart and I noted this point, first thing that I do is go to the higher time frame. So the higher time frame will tell us everything that we need. Currently we can see that the market is in a bearish trend. Why? Because we can see that the market is failing to create new highs and it is creating new lows and new highs. So this is a sign of a downtrend. Okay, so on the downtrend we first need to see where the market tends to go. So as we can see before here on the past, we have some lows that were not mitigated, that the price grabbed some liquidity and it started going up. For instance, here this low right here is a low that contains liquidity. Why? Because it swept all the liquidity that was here on this previous lows. So this can be an interesting point for us to visit it on future. So meaning we should mark this as an important point to visit. Secondly, we have another liquidity point where here and here. So the last high or the last low in this case, it's an important point for liquidity grab. So we can mark this as a liquidity point. So coming here into the chart where we are currently, we can go down to the 1 hour time frame. So the 1 hour time frame can tell us what we need. So we are here on this downtrend. Okay, we had this massive candle. I believe it was from a new on Friday from USD that came positive for the negative for the USD. That's why we had this push to the downside, and we made this retracement. We continued going to the downside. So once we reach this point right here, we can clearly see that the market failed to perform a change of character. Why? A change of character will only be valid if we broke into this previous high right here and then we had a retracement. Okay, so what I mean here we had a break of structure. This was a break of structure and we failed to perform a change of character. Okay, we failed to perform a change of character. This cannot be considered a change of character, but this can be considered as a liquidity sweep. Okay, so it will only be a change of character if we see a sequence of candles going to the upside, breaking into this zone right here. Then we can, yes, consider it as a change of character. Else we will only consider it as a sweep of liquidity. So why I was very comfortable saying that this is a sweep of liquidity and not a change of character, because I believe in market repetition. Forex market is about repetition. The same thing, the same setup that is given here, it has already happened in the past and in different kind of charts. Okay, in different pairs. We can see an example. For example, on the chart of US oil, we had a particular same thing right here. We had this downtrend, we had break of structure, being this our low and this our high. And then what happened? The market retraced, but it failed to build up some candles to confirm a change of character, meaning this will be only a liquidity sweep. Why? Because there was some liquidity laying under this highs right here. So once we had the liquidity sweep, the market tends to go down and give us a very good risk and reward ratio. Another example, we can see it on GBP NZD, also with the same kind of setup. We had a downtrend and then the market failed to perform a change of character. Right here we can see that this is a sweep of liquidity, and then the market came down again because we had this sweep of liquidity that was laying under these zones right here. The market came up again, did fail to perform a change of character by building a sequence of candles to the upside. Then we consider it again as a liquidity sweep. Once we had the liquidity sweep, what the market did, the market pushed the market to the downside, meaning I already have two examples of what the market will do in such type of situation. So in this case, following this same way of thinking, I will also apply it here on this pair of USDCHF. So I already know that when the market fails to perform a sequence of candles to the upside, I will not consider it as a change of character, but I will consider it as a sweep of liquidity. So once we had this sweep of liquidity to the upside, the market tends to start going down. So going down to where? I can see that we have this low right here that is holding some liquidity, so I can mark this zone as a prospect zone for the market to go and grab the liquidity. I want the market to go and sweep this zone right here, or break this structure. I can say sweep of liquidity or break of structure. Okay, so once the market, what the market did, the market came and swept this low or broke this low right here. We did not have a candle close on this zone to consider it a break of structure. Then we will consider it a liquidity sweep. Okay, we consider it a liquidity sweep. So once we already grabbed the liquidity from the buy side and the sell side, we can clearly see that the market now has a potential, now has strength to push the market to the downside. So what can we do? We can use a price and discount tool or a Fibonacci, according to what do you prefer. We can see we can target the 50% zone that is right here. Once we mark the 50% zone, we know that this is the zone that we need to enter our sell positions, So my position was somewhere around here. Our stop loss can be above there or in any level of Fibonacci, of your own Fibonacci. Let's say our stop loss will be there, and then our target will be first the 100%, that is this one, and then the next level that contains liquidity. So this zone right here, it contains liquidity, so I can mark this zone as an important zone for me to target in this trade right here. So this can be marked as a liquidity zone, so this can be my next target as my take profit. Okay, the other target is which one? Is the 100% of this retracement that we had. So this is also a target for me to push. Okay, I know that here once we start this movement, we will target another liquidity point. So these liquidity points can be found where? When we come to the higher time frame that we came at the beginning, and we see the zones that contains liquidity on the past. So we mark this zone right here and the extreme zone that was here. I mentioned that also this zone was a very good liquidity zone to search for. So meaning once we mark these two zones, our target can be open to those zones. So what can we see? We can see that the market came and pushed all the way to those liquidity zones right here. So currently the market is we are in Asian, entering the London session. So we can see that once the liquidity is taken from those points, the market can now start building the change of character that we were expecting to happen there. So meaning, what are we waiting for now? We are waiting for a movement to the upside, creating a new high, and then a break of structure again, and then a break of this zone, this high that was created. In this case, it will be a change of character, a retracement to the 50%, and then yes, we can enter buy position to build to the upside in this pair of USDCHF. Okay, so thank you guys for watching this video. This was a breakdown of this trade that we took with a risk reward of 1 to 5 or 1 to 3.5, depending on where you took your take profits. And I hope you enjoyed, guys. Thank you.